Hello, traders. Cousin Vinny coming to you from theclosingprint.com, November 20th, 2022. In this edition of your weekend video newsletter, we'll discuss the indices, all of which were off a bit last week, with many of the growth stocks mixed and Nvidia falling after earnings. We did have some winners in the tech space with Cisco leading higher, Arista Networks, and retail also pushing a bit higher with Walmart and Ross stores having a good week. Merck was also higher, so we'll look for some of these to continue, while the indices are more in a defensive posture at present, with consumer staples, utilities, and healthcare seeing a lot of buying last week. That leaves us with only 7 bullish indicators, 8 neutral, and 5 bearish coming into this week. We have the S&P 500 support at 3960 and 3900. Resistance is at 4000 and 4075. Zero Gamma and Vol Trigger both moved higher last week. Bottom line, we're looking for more defensive posturing. We are a bit more cautious given the lack of follow-through and OPEX on Friday. This is the S&P 500. We can see that RSI is still above 50, showing strength of trend. We got rejected at the 200 EMA, with the 200 SMA still overhead, that red arrow. With the 9 EMA and the 21-day both above the 50-day now, we're cautiously optimistic that we might see a follow-through this week. However, we did note that defensive sectors, consumer staples, healthcare, and utilities were all higher last week into Friday's close. Therefore, given the 7 bullish indicators, 8 neutral, and remainder bearish, we are cautiously optimistic going into this week. We also made reference to the fact that the number of stocks trading above their 50-day is still in the red zone at 82%. The number of stocks trading above their 200-day in the lower panel is at 56%. So there's still potential for the S&P to continue higher, despite the fact that we saw a strength in consumer staples, healthcare, and utilities. So that tells us that investors are becoming more defensive, and something we need to pay attention to as we start Monday and Tuesday trading. We also had, towards the end of the week, fade in the growth stocks versus value in the upper panel, which means that growth did moderate, but still above the 21-day moving average, with value stocks in the materials, energy, financials, and industrials group gaining a bit more strength. That said, we do note that the Copac cycle is still bullish for the NASDAQ 100. At the same time, we had small caps, which we'd like to see leading, fading its Copac cycle, moving a bit lower as prices consolidate just below 190 last week, while biotech cycles had turned higher. Taken together, IWM and biotechs are considered very risky assets, so if those start to move higher, that would be a good tailwind for the markets this week. All things considered, 3 of the bearish indicators I'm looking at this week relate to breadth. We have the S&P 500, mid caps, small caps, and NASDAQ advanced decline percent adjusting lower. Now this could set up energy for a push higher. And if we take that together with the NASDAQ McClellan Oscillator and the NYMO, the New York Stock Exchange McClellan Oscillator, both of those are starting to peak and roll over. You see that black line is starting to make a move lower. That could mean a peak in the breadth indicators for this week. So that's 3 breadth indicators that are giving us more bearish or at least caution signals at the present time that we should be aware of as we start Monday and Tuesday trading. If we counterbalance volatility with breadth, we can see that VIX is on a green signal. So this 60-minute time frame is telling us to look for higher lows and higher highs. So if we do start to push higher this week, just keep an eye on breadth. We'll do the same during the live broadcast and let you know if there's any reason for us to start adding to our hedges. Bottom line, I would say we need to be more cautious this week, as there are more reasons for us to think that we could fade a bit more unless something bullish comes in and pushes the markets above the highs of last week. I've overlaid the 10s and 2s yield curve with the 10s and the 3-month yield curve, which also inverted last week. Historically, that yield curve inversion has predicted 12 out of the last 11 recessions. In other words, it only had one false positive. That's a pretty good track record and increases the odds of an economic recession, which normally carries bad news for stocks. Another reason to be more cautious going forward. In contrast, we're watching the US dollar. If it does fade a bit more out of this consolidation and starts to head towards the 200 period, that would be a bullish tailwind for equities. Any moves higher would probably put pressure on stocks as well as commodities that all fell last week, with copper, gold, and silver all fading similarly, with additional weakness in Brent and West Texas crude, all of which put pressure on gasoline and oil and gas stocks last week, with gasoline continuous contract pushing lower. Good for consumers going into holiday travel season. Obviously also good for their pocketbooks. Finally, we have the monthly CRB index. Commodities continue to show a fade. Lower highs put further weakness on this particular chart. We're looking for a pushback to 260, bullish for consumers, and potentially adding a tailwind for equities. The sector heat map shows a little bit more yellows, oranges, and lime greens. Moving from chartreuse from left to right in the top panel, you can see the dates updated every Friday. We're looking for this to continue this weakness. If we start to turn and see sector strength building, we'll let you know during the live broadcast and via the alerts channel. For now, we're seeing strength in real estate persist. Even semiconductors saw some strength last week. Utilities, consumer staples, and healthcare mostly. More of a defensive posture. We have Europe, South America, and Asia all becoming more green. So that's good for international markets. Other areas to invest in, by the way, besides the US. So something to keep in mind as well. That said, if we take the ratio between consumer discretionary and consumer staples in the upper panel, this is moving a bit lower. This is the equal weight in the top panel. This is the regular XLY versus XLP. You can see both of these are turned lower. That's telling you to be cautious until it makes a higher low and a higher high. I also mentioned we want to make sure that biotechs and small caps are moving higher. We can see IBB biotechs are in a trend mode above the 20 EMA, moving higher. Real estate, 20 EMAs crossing the 50-day. That's a good sign. Transports, we have the 20 EMA crossing through the 50. That's bullish for equities. Materials continue to push higher. The 20 EMA crossed through the 50-day a couple of weeks ago. Communications is neutral. We got energy right along the bullish 20 EMA. That looks good. Financials are still rising, despite the bears telling us that we should be moving lower. Financials continue to trend, looking for a break above 36 this week in XLF. Industrials also pretty strong, looking for a break above 100. Technologies holding up very well. We got the 20 EMA above the 50. Consumer staples along with utilities and healthcare are what we should be watching. That's showing a more defensive posture by institutions and something we should be aware of. At the same time, consumer discretionary was a bit weak. We want to see that moving higher if you're bullish equities, along with retail going into Black Friday and the holiday shopping season. Target's already warned us of a potential slowdown that they're seeing and reflected in their guidance. Bottom line, sectors give us reason to be cautiously optimistic, but we'll be watching those consumer staples, utilities, and healthcare for reasons to be more bearish. Coming into this week, we have a decent amount of IBD 50 stocks. We also have relative strength candidates from scans that we're watching. The stocks with asterisks, post-earnings trades, or some catalysts that we're looking for follow-through in the short term that we should be paying attention to. Alibaba had earnings last week, had a nice pop on Thursday, inside day on Friday. Watching the 9 and 21 day cross up, looking for a follow-through. I note the volume that came into earnings was increasing. MACD's above its signal line. Stochastic's a bit overbought right now, so any consolidation around the 50-day or a resulting move to the upside, I'd definitely be interested in with Alibaba. The same goes for Foot Locker trading post-earnings. Note the volume. Price above all of the moving averages with MACD above its signal line, RSI pointing higher, telling us to look for a bullish trend. So we'll be watching for that to follow through in the short term. While the weekly price action is above the 10 EMA, we're looking for the 10 EMA to continue higher as well. Rate of change is starting to accelerate a little bit more. So we'll look for a follow through in Foot Locker in the weeks to come. We're also watching GM after its investor day. Price action remaining above all of the key moving averages. Volume was well above average on Thursday and Friday, telling you that's probably institutional money appreciating what management had to say. Looking for a follow through here as well, with the weekly time frame showing price action above the 10 EMA and maybe a double bottom on the weekly. Looking for a follow through and a push above these pivots for a continuation above 42.50 in the short term. JD.com also had earnings last week. What sticks out to me is the volume preceding earnings was building. There's over 100 million shares traded hands over the previous 3 weeks. And we're at the key 200 period moving average. So a move above this level would forecast a potential move towards 67, 68. RSI showing strength of trend. Planet Fitness also had an investor day and earnings, with management raising guidance for fiscal year 22 across revenue, EBITDA, and adjusted net income, with Roth Capital Partners upgrading the stock as more people since the 2020 COVID lockdowns go back to the gyms, resulting in forward guidance being lifted by management, speaking extensively about the opportunity for domestic and international unit growth. The 4,000 domestic units outlined at IPO is likely understated as management finds more opportunity to saturate markets. That being from Investors Day last week. I'm bullish on Planet Fitness, looking for consolidation here near the 200-day moving average and for volume to keep telling us to stay bullish. Look for a follow through in the weeks to come. Walmart pushing higher. I got assigned 500 shares of Walmart. I had options that expired on Friday that with a 150 call. I wasn't paying attention. That's okay because I'm bullish on Walmart. We did see Bank of America turning more constructive on Walmart last Wednesday after talking about the retail giant's earnings report. Bank of America noted that Walmart is gaining market share in a tough consumer environment and sees support for continued upside as it makes more share gains in the grocery segment off its strong value offering that's appealing to a widening range of customers in a challenging economic backdrop. Look for Walmart to follow through. RSI is pointing higher, strength of trend. Volume looks pretty good. MACD above its signal line and stochastic rising. Neurocrine Biosciences, NBIX, is on the IBD 50 this week. Nice bounce off the 50-day moving average. Volume was looking pretty strong as well. Neurocrine stock jumped on raised sales outlook for Ingrezza. Q3 revenue up 31%. Look for this one to follow through this week, again on the IBD 50. Par Pacific Holdings, PARR, relative strength looks very strong. RSI is pegged at 70. We have a 3 weeks tight pattern, one of my favorites when it shows up. Very rare pattern with earnings the first week of November. This one looks like it's going to follow through. Note the volume, MACD's turning, and stochastics rising. Par Pacific on the IBD 50 and in the oil and gas sector, with an earnings call presentation on November 5th that was met by buying and accumulation by institutions. Look for par to follow through this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, November the 20th, 2022. Check out the stocks that are listed in the opening monologue. Most of these look like they'll follow through. Stocks with an asterisk, pay particular attention to. News catalysts or guidance, which may help propel those stocks higher in the weeks to come. I'll send out a watch list later tonight around 11:30, 12 o'clock on the East Coast, around 8:30, 9 o'clock on the West Coast. Be sure to check your inbox for that. Otherwise, have a great weekend, take care, and we'll see you in the morning. Ciao.